Hello everyone, you're welcome to my channel. This is Inside Real Estate and I am Lekon. Today I want us to look at the similarities between Ponzi schemes and real estate buyback schemes. So we want to find out, are real estate buyback schemes legitimate? Are they right? Are they good? Or are they just another way of siphoning funds and duping people and scamming people? Before we go further, I'd like you to like and subscribe to this channel. If you've been getting value, I think it's something that is good for you to do. So just click on the subscribe and click on the like and share it with somebody as well. This is going to give you good value for your time. So what is this buyback scheme? Buyback scheme, I'm sure you've been seeing it on Facebook, Instagram, you've been seeing it online, different real estate companies and developers telling you that they will sell you a property, maybe at a low price, and then you, after a duration, usually a very short duration for that matter, they will give you some high returns, and then they will buy the property off of you. Now that is definitely, or that is exactly what buyback is. The developer promises you a property, or investors buy properties at low amounts with the promise of high returns on investment or high interest returns on investment. And then after a very short period of time, which the developer now offers to buy back even the property from you. Now, it sounds good. Most times when you see the ads, when you see the commercials, on wherever you see them, when you see those commercials, they sound good and they sound legit. After all, you know this company, you know that company, even know where their office is. And then they sound very good. And you say, okay, why not? And you go ahead. But because it sounds good, does that really make it good? So let me give you a quick origin story or a backstory to this, especially in Nigeria. Can almost certainly pinpoint and point to where real estate buyback schemes began. Before now, it was always selling of land, selling of estates, buy this plot, paying installments. That was what was prevalent in the real estate market. But you see, when COVID-19 hit and that lockdown hit, people couldn't go out, but people needed to be earning. Now, real estate developers also couldn't go out, but they needed money to be executing projects eventually, should the lockdown or the moment the lockdown was eased. So they began to give out different investment options to people. And that is, and when people invested, because after all, we didn't know how long the lockdown was going to be for. So people were investing and saying, okay, at the end of this time or whenever the lockdown is eased, they will use my money, they will sell real estate, and then they will refund me my money with the interest, which is exactly what happened. Because when the lockdowns were now eased, the market was hot, the market was booming again, and people were buying properties, people were moving into sites, and projects were going, and people were keying into all the offers that were available at that time. Now, little did we know that it was going to grow into what you are seeing today as this buyback scheme. Now, after years had gone by, no more lockdown, market has reached its saturation point. People are faced with depression again, economic recession and everything. There isn't liquid cash as it used to be flowing around anymore. CBN has instituted policies. There were just too many things going on. So the next thing, developers needed funds to execute their projects. So how else can we go about this? Crowdfunding, or just simply give a buyback scheme? Because for them to be able to crowdfund, for real estate companies to be able to crowdfund, they have to be registered with SEC, which is the Securities and Exchange Commissions of Nigeria. Okay, and many real estate companies are not licensed or to raise funds or crowdfund, and they are not authorized by SEC to do that. So the only other option was to begin buyback schemes. They say, after all, we are promising you your land back, or we are promising you land, just buy this land, and we are promising to buy the land off of you. Now, on face value, it sounds fine. But if you look into it, it's still the same thing, or it still runs the same model as a Ponzi. What are the similarities between the Ponzi's? Many of us have heard about CBEX, you've heard about MMM and the likes. They are all Ponzi schemes. Okay? And so that you will not use your money to buy back something that you don't want to buy back eventually. So why you're listening to this video at this time. So what is the similarity between a Ponzi scheme, and a buyback scheme? Okay, the Ponzi scheme promises you high returns with little risk. In fact, it goes as far as paying you your returns using another investor's money. Now, buyback schemes too can also be like that. They'll promise you high returns. All the risk you have to incur is buy land, and that is that. But as long as another person is still keying into it, when your own tenure expires or has reached this expiration point, they can always use another investor's money to still pay. So it is still operating that same model. Now, are there differences between the two? Yes. Whereas the Ponzi scheme has no tangible asset attached to it, it's just coming with X amount of money, and then after a duration, begin to reap returns on that money. And so what happens is when another person comes in, while that one is waiting for his own expiration period, they use his own money to settle the one whose expiration period is already due. Do you get it? So there is no tangible asset on ground. Buybacks offer returns on the premise that you use land to secure it. So that is the equity stake there. That is the risk factor there, the land. And then the estates tell you things like, after all, they also have their asset base valued in land going to billions of naira. So worst case scenario, if the investment doesn't work, maybe the project doesn't work, they have assets in property worth millions or billions of naira, which can be sold in the open market and then raise the value to repay their investors. Now, the challenge with that is they give you a return promise that is so good that you cannot resist it. And the reality is it really paying like that? We are in this market. We know how the market is going right now. We know how buyers are right now. And this is 2025 May. It is not a buyer's market. It is a seller's market, but not a buyer's market. Sometime toward the just a little bit before the elections, and even after the elections, before the inauguration of the new president, the current president of Nigeria, it was a buyer's market. People were buying left, right, front, and center from the diaspora. But currently, it is a seller's market and a developer's market. So it begs a question how they intend to generate those returns that they say and they promise. Does that mean that buyback schemes are wrong or are bad? Absolutely not. Do you get it now? It's done everywhere around the world. Even in some of the very advanced countries, it's done there. But you need to have proper knowledge of what you are getting into before you get into it. What are the advantages of buyback schemes? So you have guaranteed in returns on investment, because you know that after a duration, you are getting your money with interest back. That is one. Number two is that you have portfolio diversification. What does that mean? It simply means that beyond whatever it is you are earning or whatever it is you are doing, your money can be used in other areas. You could be a medical doctor and you are earning from real estate. Of course, there are high yields. So they'll tell you 25%. Or for instance, you buy this land now at 1.5 million. All right, you pay outright, you pay this, you pay that. After 1 year, we're going to be giving you back land, and we're going to be giving you X amount aside the money or the capital that you used to key into the project. Do you understand? So there are always high yields. They can tell you the X amount is 500,000 and use 1.5 to buy land. Hey, that is good investment. If I know that after 1 year, I'm getting 2 million plus a plot of land, saying I use 1.5 to key into it. I mean that is good returns on investment and high yield as well. So that is just it. But you need to weigh these things against the disadvantages and the risks that may occur. Now, this is where it gets tricky, because now I want to talk about those risks that I have seen within the real estate sector. Number one risk factor or disadvantage is default risk. Many real estate companies will fine you and find customers for defaulting in their payment. and they will give them penalties. But I've also seen that many real estate companies, when it is time to return this investment to people, they default a lot. Then you'll be getting stories. Then they will bring out one fine print. Then they will say one thing or the other. And an investment, some people took loans to run this investment, hoping that within that duration they will get their money back. And then you find out that it's running from 1 year, 2 years to 3 years, 4 years, and it becomes messy. We've seen it, how people drag themselves online. People drag real estate companies online simply because of defaults. So before you part with your hard-earned money, you need to check for the default risk. Another risk factor is lack of transparency. Maybe because it's not regulated, or maybe because of the way Nigerians are. We don't pay attention to details, and we really don't like to question a lot. There is a whole bunch of lack of transparency when it comes to buyback schemes. There are many companies that tell you things like, you don't need to know what we're using the money for. Your own is at the end or at the promised time, just send us the account or we'll credit you this and that. As an investor, you have every right to demand that you want to see what your fund is being used on. You have a right to ask to go and see the project that your own little contribution is helping solve. Do you get what I'm saying now? But there is that lack of transparency. That is why you find out that there are many CEOs who use these real estate funds for personal agenda. They use it to register names, companies in their names, buy assets in their names, home and abroad. And then that will now be fetching them returns on investment as against you, the investor. If, for instance, I offered you some kind of buyback scheme, and then I took the funds from that investment, now a couple of you, the investment, and I took it, I went to buy a house in Texas or buy a house somewhere in Miami, and I'm taking rent. The rent I'm taking from that investment in Miami should come to every investor. But you find out that when they want to buy the house in Miami, they'll buy it in their own personal name. So the rent will be going to them only. And then when they now get proceeds from that rent, they now use the funds to look for one shoddy or one low earning thing somewhere in Nigeria and then invest in that. And then they'll be showing you that as what they are using your funds to do. There is just no transparency. I'm just using that as an illustration, okay? Just to help you understand what's going on today. We've seen news reports where some CEOs were arrested in or accosted or stopped in France, Nigerians in the real estate sector, because they used the funds to open boutiques, foreign boutiques selling designer stuff, but in personal name. Do you get what I'm saying right now? So there is a lack of transparency. You could just be paying into a company that is using your funds to further their own personal agenda, and you are there waiting and waiting and waiting for a return that may delay in coming. Okay? So that is another risk factor or disadvantage. And the third one is unsustainable business models. Now, there are few companies in Nigeria that I must say I respect when it comes to delivering their value, though I will not be mentioning any names here. But there are some that are legit. When it's time to deliver, they deliver. But what I've discovered is those companies have a very strong business model. You see, many of these companies you see on social media, you see here and there, advertising this, advertising, and many of them don't have a very strong business model, which is why you see them actually pushing those ads on social media. What does that business model refer to? It refers to how they intend to trade with that money they are collecting from you and use it to generate the returns they've promised you. Many companies have it in theory, but they don't have it in actual practical. So at the end of it all, what it now turns to is, worst case scenario, we'll use Peter's money to pay Paul. And how is that any different from Ponzi? What is the motivation now? I'm going to talk about motivation. What drives companies to offer buyback schemes? Is it from you hear some companies say it's because they want to help provide accommodation. In the housing sector, there's a shortage of housing. They want to help people. They want to do this. They want to do that. There is always, but what is the motivation for the companies? Most of them, why they run out buyback scheme is because they need funds to execute projects. So as the dollar rate is going up, every day dollar to naira equivalent is, the exchange rate is going up. People need funds to continue the projects. So they roll out buyback schemes. Okay? They need funds to keep up with the times in the economy. They roll out buyback schemes. So in a nutshell, it's for profit. Why do people indulge themselves in buyback scheme? Of course, they are looking for returns. They are looking for investments. They are looking for more money. So for both parties, it is returns we are looking for. Whether it's the company, whether it's the customer, they are both looking for profit in one way or another. But when you find people going to Ponzi schemes, they are not just looking for profit, they are greedy. Do you get it now? They are being greedy, and that is why they end up being swindled. Now, having put this into perspective, I like to raise some red flags. And when I say red flags, this is so that you don't even waste your time, even if it's called a buyback scheme. All right? Sometimes it's a Ponzi scheme, but they mask it up as a buyback scheme. So even if it's called a buyback scheme, so that you don't just waste your time with it, you just abandon it. There are some red flags. There are some things to, there are some red flags. There are some things to check. There are some things to look at. There are some things that you say, okay, no, with this and this and that, I know that this is not genuine. Let me just move. And then there are some that you say, okay, with this and this and that, okay, fine, this is genuine. I can actually invest in this scheme. So somebody is telling you that give 1 million naira. I'm using that as an example now. And in exactly 1 year from now, you'll be getting 2 million naira. In fact, somebody is telling you that give 1 million naira now. And in exactly 3 months from now, you'll be getting 2 million naira plus your 1 million naira. Be very careful. I don't care the kind of asset you bring into that. That is not sustainable and it is not true. And some of us are seeing it right now. Even the CBN is cracking down on some companies as we speak because of such unrealistic returns. If they tell you bring 1 million now, and in the next 1 year you'll be getting maybe 300,000, something like that, you know that, okay, this thing still seems to make sense. Or, you know, buy this land and then after so time, it will give you this amount added. You know that it's much more sensible than somebody just telling you that bring this low, buy this land for 500,000. And you know, in that area, they are selling land for 10 million naira. And the person say, buy it for 500,000 now. And then in the next so year, you will get this and you get, see, be very careful. All right? So that you don't fall a victim. Another thing you need to also look at is, like I said earlier, the lack of transparency. All right? When a company begins to give you one excuse there, one this there, you can't go to the site now. You can't go there. No, you don't have any business in this. You don't have that free access to come in and go as you please. Then there's a problem. There is always one restriction after another. There is always one bottleneck after another. There is always deflection. When you come with a complaint about this, or you bring a matter up, instead of they'll say, okay, no, we'll add money to you. We'll add money to you. Just always more like shush money or trying to hush you. Be very careful of such companies. All right. And then the third one, which is a red flag, is check if the company is registered with SEC, the Securities Exchange Commission. They are the regulatory authority when it comes to such. So if the company is not registered with them or regulated by them, then be very careful so that you don't fall a victim. And like I said, not all buyback schemes are bad. I'm just only giving you a holistic approach or a holistic view into it so that you can have the proper knowledge to make your informed decisions. You want to go into it, you feel comfortable with the company. The first thing you want to do is research the company. I can't stress that enough. Whoever is offering you something, always make sure you research. Like now, I'm sure the way I'm talking, I think people have gone to click on my page or something just to find out if truthfully this person knows what he's saying. I'm speaking because we are tired of hearing too much complaints out there. And at least to help you maximize um, your investment options properly, to help you see and help you achieve your goals in the right way when it comes to real estate investment. Okay, so research the company. One thing I can't stress enough is whenever a contract is given to you or a form is given to you, read everything and read the fine print. Get a lawyer to help you interpret that fine print if you do not understand, so that it will not haunt you tomorrow, or even if the matter now comes up, you are properly prepared and you are not ill-equipped to handle it. Okay, so in conclusion, are buyback schemes Ponzi's? Some are. In fact, in Nigeria, categorically, I can tell you that a lot are, but not all of them are. There are those that are not. So with some of these tips you've seen in this video, you can be able to make informed decisions and deduce which is which. If you love the content you heard, I'd like you to once again click on the subscribe button, click on the like button, and share it with your friends so that this can go around. Bye for now and see you soon.